And away we go. Tuesday post game show. Wall Street Jesus here. Go over some sweeper activity and get us all set up for the Super Bowl, what I'm calling the Super Bowl of markets, at least of the stock market for 2018. There's always one big event, and more than not, the Fed is somewhere smack in the middle. And there's no bigger day than tomorrow. And we should get an indication of at what point does this thing end up becoming or rolling over into a panic or a sizable squeeze, because everybody's so underexposed. All right. And we'll talk about that quickly. We'll talk about just the overall activity out there. There's not much to go over, but I want to talk about the significance, and kind of what I put in my tweet on my regular personal Twitter account. I think that goes underappreciated, how when you have a lack of confidence, a lack of quality flow, sweeper activity out there, how that plays as an edge in itself, how valuable that can be. And I know it comes across as corny, okay, and we all want action, but to go over the corny lines once again, you got to have some discipline when in this game. You got to have something that puts that seatbelt on you when things aren't lining up in your favor. And for me, you guys know, I've been preaching it for a while. It comes down to what the wise guys are doing in the option market and where the retail crowd is lined up on the other end. Okay, and if I can get the two to line up on opposite sides, that's where I'm max confidence. Okay, but we always look at the good, the bad, and not the in between. We never really look at that. And the in between, when it comes to my style, and what I feel is my edge, is when you have one or the other and what you do and what you choose to do with that information. Okay? Because basically, here's what's going on. Whoever was on the Saturday webinar, we were open to the public. So even if you were a non-member, we talked a little bit about the setup going into this week. In my opinion, okay, the stuff that I look at, and I know there's, a good number of you who also look at sentiment, and you may be seeing some things a little bit different. Maybe you look at a couple different indicators than I do. From what I look at on the sentiment front, and we spoke about Saturday, we are pretty much, for me, there's no more to come out of sentiment for me. Meaning, yeah, there are a couple things that can add to the mix. Okay, meaning that panic, that capitulation where we see, we spoke about several times in the past. Remember, we were talking about the leveraged ETF, which we call the degenerate ETF buying, when the retail crowd starts to scramble for exposure in the bearish leveraged ETFs. Okay, because when they do that, obviously they're feeling pretty confident on the bearish side. We haven't seen that. We haven't seen that. We actually seen that. We've seen almost everything line up into the February lows, back off the panic attack, the volatility attack. Okay, but we haven't really seen that. Okay, another thing we haven't seen, the put the calls explode. Okay, yesterday, believe it or not, was the first time the equity put the call almost printed a 1. Okay, and anybody who follows the equity put the call, that's what you want to see, above a 1, to indicate that there's some panic out there. Okay, we haven't gotten that. We haven't seen that at all. We haven't even come close. Yesterday we had a 9 handle, which is as close as we got. Okay, so maybe that's a start. But for me, in my style, I don't need to see capitulation and panic. Okay, because even if we don't see a bottom per se, okay, or the bottom, I should say, there are, in the worst bear markets we talk about, there are bottoms where you can look for long entries and you get some decent sized squeezes over the course of days, a week, and can be extremely profitable. All right, and that's what we've seen up until this pullback here, right? And every single one of them, I don't know, you guys I'm sure would agree, every single one of them has been decent. Hold on, I know what to do here. There we go. And let me just show you exactly what I'm talking about. And most of you guys know what the hell I'm talking about, but just in case you're a little confused here. So in other words, what I'm saying is, obviously this low here wasn't the bottom. We're lower than that, but you could do some damage if you're long into this rally, right? Same here, right? Decent rally. You could do a little damage if you're long there. Now, this is the one setup here, okay, where we're at least waiting for something like that. All right. So when I say this, for me, the sentiment is there already. It's all set up already, even though there's no panic signs, there's no capitulation. None of the indicators that measure capitulation are signaling that. We are at least set up on the sentiment front for something like this. All right. And what I stress to you guys, the way I like to play it, you guys know I'm a big sweeper fan, right? I have a sweeper fetish, because that's what sweepers tell me. They're an indication of momentum, right? The smart money they're aggressively speculating in the options market. So they're playing with some confidence. They're aggressively speculating on either side in the options market. So when we have sentiment on our side signaling there's a high probability of a squeeze, and then you have that aggressive real sweeper activity come in, that's where the tide can change and you get at the least something, like this. All right. We went over Saturday. Sometimes there's a lack of sweeper activity. Okay. The smart money, they're not confident enough to start speculating in the options market, let alone anything else out there. Okay. And what you can also see is what we saw today. And we saw, I think it was yesterday. I can't keep track of these days anymore, but where you have weakness and then you get either that reversal from red to green, or you get the gap up the next day, and allows you a window to sell into that snapback. Okay. A lot of you out there may not be interested in that. You may not be interested in playing for that. It's too quick. You don't think risk reward wise it's worth it. That's totally understandable. All right. But I went over what you need to see here as an indication that we may see something worth your while as far as the squeezing concern. Okay. Based on what I look at, sentiment and sweeper activity, we need to see some quality buying come in. Okay. And what I mean by quality, if you guys remember, we spoke about on the webinar, and those of you who are members, let's take this bottom in particular, or whichever one you want to go, we'll go one by one. If you remember, we were seeing, $800,000, $900,000, $1 million sweeps in some of the names that matter. Okay, we spoke about this numerous times. Okay, Amazon, the Goog, G-O-O-G, caught almost $1 million sweep. That name doesn't catch that type of action. Facebook, again, the first bottom, we saw Square and some other names like that involved as well. So that's the signal for me. The more I see of that into these lows, the more I want to be aggressive. Okay. So if the market languishes down here like it is right now, but we're seeing that type of sweeper activity, I'm going to look to add to my entries or to my longs every time I see that type of activity come in, as long as we're still here. Okay? As long as sentiment, whoop, coffee almost went south. As long as sentiment is still set up, and as long as we're at, at or the or better levels from there. Okay? What we're not seeing, and it's totally normal. I've seen it in the past. They don't always show up when you want them to. But what we're not seeing this go around that we saw these last two bottoms here is that quality sweeper activity in individual names. Okay. What we're seeing is we're seeing some size on the ETF side. Okay. And that's all great. That's fine. You see size on the ETF side. That's great. But you want to see the action spill over into the names that matter. Okay. Into the names that count. All right. Because right now we're only seeing every ETF catching size on the call side is post the FOMC meeting, right, out later in the year, and all with similar strikes. 12/31, December 31st quarterlies, after January, okay? And, basically the major ETFs. SPY, we saw the Qs. Yesterday, we saw IWM. All right, so for me, if that action's legit, okay, if that action's legitimate buying, directional betting from these guys, they're not just going to want to own ETFs. Okay, they're going to want to tattoo, like we saw, they're going to want to tattoo the names as well, considering how demolished some of these things have been. Okay, and not only how demolished, some of them are actually showing some signs of relative strength and don't look as bad. For me, that's another reason they should be coming in and buying weakness any opportunity. All right. And when I see that lack of sweeper activity from my experience in the names, they're waiting on something. They're not ready, I guess is the best way to put it. All right. Maybe they come in late, right? Maybe the market squeezes off the FOMC and they have to pay higher prices, and they feel that was the best route to go. But from my experience, one of these funds, syndicates out there, groups, are going to come in guns blazing, and they're going to start buying stuff, and you're going to have other Sharpies out there getting wind that somebody's sticking their neck out and start buying, and that's how it all starts. Nobody wants to stick their neck out, is the impression I'm getting right now. And for good reason, right? For good reason. We want to see it, but the likelihood is it's the prudent thing to do. Maybe they're waiting for the capitulation. God knows. God knows. Okay. I don't even like to get, it's interesting to talk about the stuff, maybe try to figure out the reasons why, but we have no clue. Okay. Unless you know these guys personally, we have no clue. But from my experience, that's what happens. One big outfit sticks their neck out. They start to do some real shopping, and then all of a sudden, the floodgates open, and little by little, you see some more size come in, and it almost builds up into a frenzy over the course of days. Okay, it happened back in the 2015-16 lows. It happened one of the most recent post-election when Trump got elected. Okay. 2011, I mentioned to you guys that this was starting to feel like 2015, 2016. Now it almost feels 2011-ish to me, where, you had this market, drip, 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 and now maybe we break through those Feb lows, and, then all of a sudden the action comes in late out of nowhere. That's also a possibility. All right. But the bottom line is, for me, I need to be ready, and I am, okay? And at the same time, I want to be smart, all right? And you guys who are in the room, you know how I've been playing it on the swing end. I'm taking shots, small shots here and there on the ETFs. I own some SPY that I'm still holding on to. I'm going to hold that through the Fed. IWM, I actually flipped early this morning. We'll see what the action looks like tomorrow morning. And I doubt we're going to see any real buying, but if we do, maybe we have some weakness and I can add something there. But see, I don't mind. If we squeeze off that FOMC and the flow never got to the names like I'm looking for, I don't mind missing the squeeze. I really don't. Okay, because that's my confirmation. That's my confirmation. And even if it comes, like I said, at higher levels, I'm okay with that. I'm okay with that. All right, because it gives me the confidence that, you know, the buyers are finally starting to show up. They're there. And right now, there's no buying to be found out there right now. Right? Every single rally fades, and you get these afternoon fades, drip, 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 and there's not a buyer in sight. We got the holidays. We got a lot of this. Again, there's numerous amounts of legitimate excuses out there for it. But all I can say, we're going in tomorrow into a big event. All right. And for me, there's two things that could happen. And God only knows what. But there is that possibility where you get the Fed say the wrong things. Okay. Even though it may not be the likelihood, it's that possibility, right? Catching people off guard. And maybe that's where the panic comes from, right? You could very easily see that happen. All right. Or, you get the Fed to do what they're supposed to do, right? And you get a legitimate squeeze because people have no exposure and sentiment is so destroyed. All right. So it adds some excitement to the equation, and we'll see if the Fed was the real issue. That's what I'm excited about. Okay. If the Fed was the reason why the lack of the buyer strike out there, the main reason for the buyer strike out there, we're going to find that out tomorrow. Okay. So whether it is or not, we'll get an answer to that question tomorrow, and we can get that out of the way. But the most important thing I can stress here, okay, especially if you can't be nimble and you see the reasons why you have to be nimble, on the long side, okay, you gotta try to be patient, relax, wait it out, and let it materialize. FOMO in this environment is just not worth it. It's not worth it in this environment. All right, whatever you're looking for, let it show up. If it doesn't, it eventually will at some point in time, probably under a better market environment anyway. And the only thing I'm going to throw out there again, and you guys know I have to throw this out there, if you are shorting, okay, if you're shorting on an intraday basis, you got to be careful regardless, right? So when I mention this stuff, I'm not really talking about those of you guys who are playing off the momentum intraday. I'm talking about if you're holding positions overnight, all right, you have to be careful here. All right, you have to be careful here. There's quite a few people in the room shorting, and they know what they're doing, and they wait for these rallies, right? Like we saw today, gap up. They let for the rally to stretch. They find their spot, and they're shorting on an intraday basis there. Okay, that's not what I'm telling you guys to be careful about. Okay, what I'm talking about is you guys laying into shorts repeatedly here because they're the only things you're making money with. All right, and you get a little too far extended, and then a monster squeeze comes and buries you once and for all. All right, because no matter what, right now, whether you want to believe them or not, the information we're getting on the retail front, on the sentiment side, is telling us to be careful of to be on alert for a high probability squeeze. That's the interpretation out of sentiment right now. And it's not just things I look at. There are a lot of things out there. You got ETF flows. A lot of stuff out there that put the calls are finally elevated enough now. So there's enough stuff out there to signal caution. And if you're bearish, okay, listen, if you're bearish, you should be looking forward to a squeeze, because then that's where you're going to find your entry for a decent risk reward on the swing side of a short. That's where you want to be looking to short. Okay, down here, that's where people get caught. They have a profitable trade or two, and then they lean into stuff, they get caught, and then run over. All right, so let me just show you guys a couple of things flow-wise. Here's the story for today, okay? And this has been a common theme we've been seeing. And for some of you members, just to get an idea of what the flow, the interpretation of the flow has been the last couple of days. Basically, we've come in, and a lot of times the market, today I think was one of the few gap ups of recent. But the majority of the time what we've been seeing is selling, right, off the open, and then some call sweeper activity, the small squeeze variety, right? Those 300-400 lot algo sweeps, Apple, Facebook, some of the ETFs, they come in and they squeeze them early morning, right? Why is my time here screwed up? So what happened this morning, we had a little different reaction where we had a gap up. The market faded a little bit off the highs, and then we started to see some of those small sweepers play off the momentum. Again, Apple, Facebook were the two big ones, and play for a squeeze and then just disappear, right? Then they just disappear the whole afternoon. It's like you see that excitement, right? Market, you see the momentum in the market, you see the momentum in the names like Apple and Facebook. You could see they were hot early on, right? And then they top out here, and then all of a sudden you don't see those sweeps ever again. All right, and that's what I mean. Those aren't real buyers per se. You know, the majority of them are machines. You know, algos just firing off high beta and ETF and squeezing folks. All right, so that's why I stress to you guys, especially members on private Twitter who aren't, hearing us talk about it during the day, in the post-market reports, that type of activity should be used for just intraday momentum purposes only, and that's it. That's what they're for. Okay? Nothing else. The stuff you want to pay attention to build a position in, to take a shot on in this environment for a swing trade, you want to play the goods. You want the real action. You want to play the real action. And right now, we're not seeing it anywhere. The most recent real action, as you guys know, was in Facebook. That's about a week or so ago, I guess, right? I don't know. It's been a little bit now. But that was the last real round of buying, I should say, in a name that matters for quite a bit. And that's one name. When they want these things, they're going to buy them all. They're going to buy every single one of them. So anybody have any questions as far as, especially those of you who are members, anybody have any questions regarding some of that small sweeper activity, how to interpret it, or what to look for? Everybody understands the point of why we're even looking at those guys? Because once in a blue moon, I get asked, why are we even looking at it? And that's the sole reason for why we focus on it. All right, and you'll see, like when you see me post a band of Apple sweeps, right? And they all look alike. 250, 300 lots, uneven number, in weeklies or in front month. Okay, and you see me post 2, 3, 4, one after the other. You can see, if you pull up a 1 minute chart on it, it's obvious. You'll see the momentum there. All right, it's just a matter of where has that momentum started already? You know what I mean? Is it long in the tooth? Or is it just materializing. Like for me, if I start to see that activity and that starts up right around here, let's say, or into weakness, that's a spot I want to jump into. That's a spot I want to jump into. But for example, if I see that action start to heat up here and there's the name's already extended as far as the rally from the lows, that's where, at the most I'll scalp, but a lot of times I don't even bother up here. I don't even bother. I like to see that action signal momentum at a turning point in the stock rather than continuation. But here, I see you guys mentioning ETFs. Here's the action on ETFs. Oops. Here's the action in names today, and then we'll take a look at the ETFs. The ETFs, they're positioning for a squeeze post-Fed, plain and simple. Okay, they're not as confident to spill into the individual names yet anyway, but whether they are short and protecting against a squeeze off the Fed, or they're just looking to have some exposure on because maybe they don't have enough for a squeeze off the Fed. That's what the action in ETFs. That's very simply put, that's what it is. Nothing more to it. All right. The size, a lot of us were always drawn to the size, right? The size of the bet. Oh, it's so big. But you got to take into account ETFs catch size. There's a lot of hands involved. A lot of players in the ETF game. A lot of it is used for hedging purposes. But there are a lot of hands. And we've seen a couple decent looking bets. I'm not going to lie to you. And you guys, those of you know me, know I'm not a big major ETF guy. You guys know I like Neil Diamond in the DIA. My favorites, VXX put sweepers, UVXY put sweepers. Because, I have a lot more confidence that those dudes are real. The SPY, it sees so much action. Like, do you realize how much action there was in SPY today? So we're seeing one opening sweep. And it's decent size. It's clean. It trades on the offer. It's greater than open interest. And we're assuming that it's a directional bet. It's not the same odds of, again, like a DIA aggressively sweeping calls and that being a directional bet. All right, so that's how I would that's how my answer to the ETF action would be. And I'm telling you guys how I'm playing it. I'm telling you guys how I'm playing it. I am not participating full size, like if I saw that action in names, like we did last go around. Okay, so I'm coming down in size, and if I see a squeeze like I did in the IWM, I already flipped that. So I'm just holding SPY. Tomorrow we see some size ETF action. Maybe I'll replace the IWM bet. Just to have a rooting interest. And where sentiment is right now, I don't mind if I lose a little bit of money betting on the ETF action. But for me, the high confidence action here would be the bull missiles in names. Okay, because again, I know that if the action's real in ETFs, right, if they're aggressively buying ETFs in confidence, they're going to buy names, especially that some of the names have been beaten down to hell and so oversold. I almost played that Nvidia sweep yesterday, and it was, again, it was, you know what I mean? You guys know that Nvidia sweep was, it was okay. But just because, the put the call premium on Nvidia is ridiculous. You got retail out there thinking it's easy money on the put side, and they're getting robbed buying puts because they're getting away with it right now. So, if this thing catches a missile, this thing is perfectly set up for a squeeze. And a big one too, right? But just the action's not there, man. What I can't, they're just not ready. And maybe because I'm used to it a bit. I've been through some corrections, I've been through some pullbacks, and it's not all that uncommon. It's uncommon because you're not in a correction as much as you're in a bull market, right? Hence why I'm a perma bull. But in corrections, there are times where sweepers go dry. They go dry. They go dry. Even like I told you guys, the Bazooka Joe lows back in 16, we weren't even getting the squeeze call sweeper activity. We weren't even seeing that. But then they showed up perfect timing, like legitimately perfect timing in 2016. Like in 2016, they showed up. I showed you guys on the chart. It was this day right here, or it could have been like this day, right where we pierced the lows. Everybody was shorting, buying puts. So think about like today's setup, right? Like what I'm telling you. Everybody, retail getting sloppy, buying puts. They're making money. They're getting cocky, right? They're buying puts, any spot. They're down. Like that's what you'll see retail. Like what they do is they usually stop themselves out. But because the market's been rolling over every day, they stop doing that, right? Because the fade bails them out. So then they get a little too frisky with that. And when the market catches them, it catches them. So, that's what happened back in 2016. And, like that SPY bet we saw, there was like 10 of those in names spread out. So, the difference here is we got a binary event. We got the Fed here. We got the Fed in the middle, which I kind of not like. If the Fed wasn't around, you could have where these guys could show up at any given minute, and you don't have to worry about that gap up on, off an event like we have the Fed. That's the problem here. Yeah, and that's, Ani, I totally hear you. A lot of the big money, it's pretty evident now, right? A lot of the sharp money, they want nothing to do with this market, right? We thought it might even, if you remember, we thought there was a chance it might bite them in the rear end because this market was rallying into September without them. A lot of them were out. You remember Tepper, what he said. This market, if there's that blow off into year end, he's got nothing. His exposure is as light as ever. So at a point in time, okay, they're going to pick a spot. There's something where the switch is going to flip and they're going to do some buying. We none of us know when. If we knew when, we'd be talking about you instead of Tepper. Okay, none of us know when. These guys, all I can tell you is they show up when the last place we want to show up. You know what I mean? The last place we want to show up. So, but we'll see what happens. But yeah, to answer your question, Deep, the ETF activity, if you want to roll the dice, right? You want some exposure just in case there's even that 2-day squeeze, right? Like look at today's gap up. Okay? that it was nothing. It was peanuts, and it was still profitable if you bought something into the close yesterday. Right? It was still a decent profit. So if you want to play in a small way for even a little bigger squeeze than that, even a 2-day squeeze type of thing off the Fed based off the ETF action, you take a small shot on an ETF. Try to buy red if you can. It's foolish to buy anything green right now based off the flow. And, take a small shot. But as far as getting aggressive here, again, for me, the stuff I look at, I'm not going to get aggressive when my signals from the sharp money are telling me they're not getting aggressive. I don't think I'm Houdini here. I don't pretend like I know more than aggressive sweepers may know. So there's no reason for me to get aggressive. I told you guys, the way I approach it is once sentiments line up, the sweeper activity is going to determine how aggressive I get into that bearish sentiment. And the reason being is bearish sentiment can linger. Okay, it can linger. Even if, let's say, the downside is limited, you can get this little drip, drip, chop, drip, drip. You know what I mean? You can get that for a while. And if no activity shows up, you can be stuck in that chop for longer than you want to be. So it's like the sweeper activity is the timing mechanism for me. It signals, okay, now we're ready. Now we got a high probability squeeze setup based off sentiment, and sweepers are telling us it's go time. That's exactly how I look at it. Makes sense, Steve? So if you want to roll the dice based off the ETF activity, take a small shot. You look to make a little bit of money. And remember what I've been stressing to you guys. In this time, okay, in these times here, especially you guys who are trying to focus on the long side, you don't want to try, you're not trying to get rich here. Okay? The real good that comes out of this mess is when this is over. Okay, you see the damage that's being done out there? When this finally comes to an end, that's the time where you can focus on start to make some real money. Now you want to be selective, you want to pick your spots, and if you come out of this process making a little bit of money, that's fantastic. Again, I'm talking about you position and swing traders. Tim say, can you speak to the difficulty of this market based on your experience? Yeah, again, Tim, that's exactly my point, and maybe I'm not talking about it enough. I just think that you can't approach every market environment the same way. You know what I mean? Especially if your style's not suitable for that, right? So if you can't be as tactical as a lot of us are talking about, then there's no reason to pretend to be. You know what I mean? Don't even try to be. Be patient. Like I said, if you can't trade as often, be patient. Like right now, okay? If I wasn't in front of a screen all day long, all right, and I'm not trading intraday, and I'm solely focused on swing trading, the only thing right now that's going to get me to push a button is if I'm screaming out bull sweepers. That's the only thing. That's the only thing I'd be waiting for right now. I wouldn't let anything else bother me. I wouldn't get FOMO from anything else. The market wants to squeeze off the FOMC, let it squeeze. Why? Because I believe if sweepers aren't involved in that rally, that thing's going to fade anyway. That's, what I believe. There's no major bull market that's going to develop here, and sweepers are going to spit on the whole rally and say, nah, we're not participating. Like I said, even if it's at higher levels, I've seen that on rare occasion where the market actually bottomed, squeezed, and there was no sweeper activity. But then one of the sell-offs that followed, even though it was higher than the actual low, that's where the sweeper activity came in. You understand? So, that's why I stress there's no reason to force anything right now. You want to try to be selective. And I get it. We're all degenerates. We all want to play. We all want action. That's what I'm saying. You want action? You put on a little lotto into the Fed, either side, and you roll the dice and take a shot. What you don't want to do is open up and try to create a big hit when things aren't lined up. That's what you don't want to do, right? And you don't want to get knocked out of the game here. That's the most important thing. I told you guys on prior webinars. You want to avoid trying to get knocked out of this game, frustrated, discouraged, or financially. One or the other. You want to be around when this thing is over, because I'm telling you, every trader, every player in this game I know that's gotten to another level has gotten to that point out of something like this. Every big guy you see on CNBC and Bloomberg, okay, if they didn't inherit the book and they made it from scratch, they all got big out of correction and bear markets, every single one of them. Jim Cramer, you see his face all day long, okay, out of the 87 crash and the startup of the tech boom. That's where he became whatever the hell he is now. So that alone is worth hanging around for, in my opinion, if you're in this game. It's not finding a way, especially if you're uncomfortable or you don't have the resources. It's not trying to force your way to trying to make money on every given tick, every given pullback, that's what you see a lot of traders do, right? They think there's a trade out of everything. Oh, the market ripped to resistance, I got to buy puts. Oh, they're fading to support, I got to buy that support. I don't think that's what you want to become. Maybe it is. Like Arnie's talking about Drunken Miller, sitting cash, chilling. I guarantee he's not going to spend the rest of his career doing that. He's waiting for a setup, right, Arnie? Whatever it may be, he's waiting for things to align, and when they're there, boom, he's going to be ready, and he's got the ammo to fire. So you don't want to get caught up in the whole web here. You don't want to get caught up in the web here. So that's why, again, I don't know what everybody's looking at out there. I don't know what their account size is. I don't know what they're trading. So I try to keep it as general and simple as possible. Okay? If you're confused or you're agitated, you're frustrated, the simple way, if you're following sweeper activity and sentiment, okay, the most simple and general approach to take here is we have sentiment on our side now, okay? As soon as we see those signs that we're looking for, and they're going to be obvious, they're going to smack us in the face when they come, those are the times you want to play. And when they're not around, you want to wait for those to come around again until we start to develop a trend out of this. And you see this market, it's just not healthy right now, especially on an intraday basis. It's not healthy right now. Look, people are, some of the smartest minds on the street are talking about the liquidity out there. It's just a disaster out there right now. It's a disaster. And if you can't be tactical, if you're not watching, every tick, you can get up, go and take a piss, and you could come back and you could be mangled in this environment. Right? Look what happened today. What the hell happened today? it was blamed on the whatchamacallit out of Washington, which then they were saying wasn't even any material news, right? Boom, look, boom, buy program here, right? This is SPY. Things are looking great. Rally's going to extend. All of a sudden, this is where things went dead. Okay, things went dead here. There was some sweeper activity here, Apple, Facebook, SPY, those algo, small weekly stuff. And then all of a sudden up here, you can see we went sideways. I thought I lost internet connection. The flow was dead as a doormat, just like that, out of nowhere, dead. And then all of a sudden you get this. Bloop, 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 bloop. You know what I mean? Yeah. Can you imagine now, you extended yourself a little bit. The market looks good here. You're thinking, oh, squeeze. Everything looks beautiful. And then you go to lunch, grab a sandwich, and you come back, and now all of a sudden you're down here. It's just, it's you don't want to get too wrapped up in this. You don't want to get too wrapped up in this. All right. Especially on an intraday basis, if you don't have, if that's not your game, you don't want to get wrapped up into it. But like I said, so because I get that question a lot, if you're trying to keep it simple now, the simple approach on the long side, okay, is you wait for these. Some are worse than others, okay? You get sentiment on your side, and now you're looking for sweeper confirmation there. And that's why, if you're a member, okay, that's what you're in the room for. My job is not to tell you what to buy, how to buy it, when to sell it. That's not anybody's job. What my job is on a daily basis is to tell you where these things are at, daily throughout the day. That's why if you're a member, you're a member. Okay? So hopefully I'm doing my job. Sentiment is set up, and trust me, I will be screaming so we all hear when sweepers show up. And in the room, you have a lot of experienced players who have been following the flow for a bit, who will be doing the same. I know Tim, if Google catches a missile, Tim, you'll see him doing cartwheels across the chat room, So it's not like you can miss it. You can't miss it. When they fire, you can't miss it. Like, I'll give you an example, okay? We see the selling, right? What are we all waiting for? We're waiting for Neil Diamond, VXX put sweepers. What happens? A DIA put sweeper shows up. You know what I mean? So you can see we're all waiting. We're ready for it, but they're not there. They're not there yet. They're not there, but they'll show up. Let me get to some of the other questions here. The real money's sitting. Yep. And that's part of the game, Delonte, right? You hear that a lot. And I mentioned that before. I'm being honest with you guys. I think when you finally come across an edge in this game, I think that's the beauty of figuring out your edge. Okay, it's something that keeps you in check when you need to be. You understand? Because the majority of us are cowboys. I know I'm a cowboy. All right. If I wasn't waiting for sweeper activity, I'd probably be going nuts, God knows doing what out there right now, and be losing my lungs. All right. So that's part of having something to keep you disciplined, and this way you can manage your risk around it. You know what your winners look like, what your losers look like. And if you have the confidence that in the long run you can win more than you lose, you're there. But for a lot of us, we need that. Otherwise, we come in every day. And if you're like me and most of the people in the room, you're watching every daily tick. If you're watching all this crap in real time, you can really lose it. You can really lose it. What else? Do we have live trading commentary in the chat? Yeah, Kevin, I'm on audio video all day long. And you have Lucci and a bunch of other traders, running their mouths all day, telling you what they think, what they're looking at. That's what I'm saying. Like, if we see bull missiles coming into some big names, it's not just going to be me on audio talking about it. You're going to see a lot of people in the room discussing how they're looking to play it. So, there's a lot of us that are accustomed and used to, being prepared for the signals we want to see. Again, it's just waiting around for them. That's what I did. I took a small shot IWM. Yeah, that's it. And that's the thing, Deep, right? If you catch a nice little squeeze off the FOMC, you make a little bit of money. If the market caves in, you take a little hit, small loss. You know what I mean? That's all you want to do. That's all you want to do here. And don't worry, I guess maybe it comes with experience. You can't worry the stream the video audio software aside. Off the site, Kevin, off the site. No, nobody has any problem. You might have an issue. I think they're working on iPhone with Safari. I think there's an issue with that. But you won't be blocked from the website. The website works perfect, No one gets blocked from the audio video. Let's go over some of the stuff today so I can give you an idea of what we look for. And another thing to do, I know a lot of traders who look, pay attention to the flow, especially when sentiment lines up, is keep an eye on not just the flow, but price action in certain names. What names are holding up well, right? When that selling band comes in, what name is catching flow, not catching put sweeper activity when they come swarming. These are things you can pay attention to. You build a watch list, and then when it catches a real bet, you're ready to fire. So here was the action today. Okay, and this is what I wanted to stress to you guys here. Okay, this is the sweeper activity, contract size. Okay, top sweeper activity for the day. You see these numbers? This is what I mean. This is spec action, trading action. They're fooling around. They're rolling the dice on a small amount of money. There's no real action. Okay, GE, who cares, right? Bank of America, peanut trade for Bank of RF, he laid 13 cents, big guy. GE, 10 cents, again, GE. Apple, like this was some of the action I was talking about today. But, look at this, okay? Like when somebody real comes into Apple here, you're not going to see this. Okay, you're not going to see that. He's going to lay wood. He's going to lean into it. He doesn't want to go that far out of the money with IV juiced. Pfizer, December 28th weeklies, 30 cents cheap. Look at this. Bristol Myers, big guy. Woo! GE 9 cents. Look at this. Okay, if you see the only order where somebody laid over $1 in premium was NIO May calls, and they're rolling out December calls. They were rolling out December calls. So he's just pushing a position out. Any clean activity today was garbage. Garbage. All right. As a matter of fact, the top activity on the day came in late, and it came in names that you guys probably never heard of or want to hear of. Selective, unusual activity. Now here's some of the size out there, okay? And some of them are blocks, keep in mind. So I instantly cross those off, all right? Again, this is just a simple scan or trade alert of contract size. PBR, big bet, right? Puts. Bank of America, 14 cents. Garbage, 28 cents. Blah, blah, blah. Look at this. NBR laid some wood, puts. CTL laid a little bit of wood, puts. CTL again laid some wood, puts. Right? Look at this. Apple. Oh, that was the order I saw before. Freeport. There was a little buying this morning, all chatter. Rio was going to buy them out. Yeah, I know. 17 cents. Keys. That's another bet, decent bet rolled out. Not one clean bet, legitimate bet. Not one. Not one. And the better action's been on the put side, you know? The better action's been on the put side. But here, you know, there's your size out there today. Okay? Like, no matter what sentiment's telling me, how can I get bullish? How? How could I be bullish? Now, you know, you can make the argument, which I had a buddy of mine make the argument, maybe because names, the individual names are in such a mess, especially liquidity-wise, maybe they just, if they're going to play for a squeeze, they're just utilizing ETFs to do it. That is possible. You know, that's why I say, if you want to roll the dice in a small way, playing for a squeeze, you know, buy an ETF that caught a decent-sized sweep into some weakness. But I can't. What am I going to do? I'm going to make up stuff? You know what I mean? Am I going to go and buy Amazon calls when I don't see any signs of action in anything out there? I can't do it. Do I see something different that they don't see? You know, especially, even more so, that retail sentiment is so washed out. That this is their bread and butter. You understand? This is where they show up. They don't show up into the highs. You know, they show up when the average guy out there doesn't want to touch anything. But, you know, when we're not seeing them show up, maybe there's a reason. Yeah, chatter. Again, sometimes you can get in the middle of it intraday, but without a doubt, you hit the nail on the head. 9.5 out of 10 times, it's a sell into the juice. I mean, I day traded a couple things today, but again, I'm not getting rich or poor off what I'm day trading without any quality flow out there. You know, I fooled around in a couple things. I got in the middle of that Apple flow for a little bit for a scalp. Here was the name that I liked only because it was clean action and we had an idea, was this thing, a cheap stock. That's what I had to resort to. AFA. God bless America. So this thing caught some Jan sweeper activity, and it's a Citron name. So anytime you see sweeper activity in a Citron loves to sweep. Every Citron play has caught sweeper activity. Every single one. So, you know, you see a Citron name catch some legitimate sweeper activity, which it did. You know, maybe a pump is coming, and lo and behold, Citron with a tweet later in the afternoon. I was actually out of it before the tweet, but got up to as high as 620, was it? 6 something. But you can see it. I'm not smart. I guess a lot of people who follow what I do figured the same thing, because this thing was acting well into the tweet, you know. But there was nothing out there. What are you guys looking at? I don't want to take up your whole afternoon here. I know it's the holidays. You got some shopping to do and all. But that's my message, is just sit tight here. You know, sit tight, play nice and easy. You know, even if you're playing the short side, again, it feels easy now, but just be careful. All right, be careful. Hopefully maybe you get that panic off the Fed and you can sell into that if you're holding stuff overnight on the short side. But you have to be careful because in the snap of a finger, if they flip the switch and the real buyers show up, there's going to be havoc out there. Yeah, Ani, I don't blame you. Ani said he wants to see some life out there in the indices and all before he even opens up. I agree with that. Listen, if you could, I'm being honest with you guys, okay? For you guys who are position traders, if you can just sit tight, if you're capable of just sitting tight and waiting through a good portion of the process of this mess, you're better off. Okay? For a lot of you who basically swing trade, position trade, don't want to be bothered with selling into the rally the next morning before it fades. If you guys could wait this out as much as possible, then that's the most prudent thing to do. Like if I'm managing money now, right? When I was a broker managing money, I couldn't do any of what I'm telling you I do for myself now. What I had to do was solely wait for a setup where I thought there would be a decent sized squeeze that I can sell into. One, I needed the liquidity. Two, I needed the time. I couldn't flip for clients. I have compliance breaking down my door. So when I was managing money, I would have to sit through a lot of this mess. But it was the smart move to make, Micron down 7% right now. God bless America. Is it really? Oh, God almighty. Oh, my God. Yeah, so listen, we're going to get, I don't think we're too far away from a resolution to this. I think we're either going to get that panic or we're going to get to a point where this continues for a little bit longer and then you get that massive squeeze. I don't think it can linger like this for too much longer. I really don't. It's either going to lead to that panic selling, or the buyers show up before we ever do see that panic. And it's amazing that we haven't seen that panic yet. A lot of people attest that to the rolling bear market. They think that's because it's been more of a process, that could be the reason why. I really don't know. Like, for example, like the inverse ETF buying. Wouldn't you think that we would get a signal off that by now? Right? We've seen worse. I mean, we've seen not as bad as this, and we've seen signals. Like I said, the February volatility was pretty quick, and we saw the riffraff run to those leveraged ETFs. But so far, not even a blip on the radar there. But that could be right around the corner. Tomorrow we got the Super Bowl, so don't fret. Don't fret. It's going to be an exciting day. It's going to be a fun day. Just make sure you have a little action on the game, but not too much to where you're going to take your anger off on your spouse when you go home at night. FedEx down south too. Anybody have any questions or anything to add before we call it a day here? Okay, my message. For anybody who's new, I'm seeing a couple people who are just strolling in here. WallStreetJesus.com. If you go there, if you have no clue what I'm talking about, then this is the easy solution. Go to WallStreetJesus.com and you click on strategy. Quick, easy to read. Tim, you know more than I do. Easy to read blogs. Okay, very quick. You breeze right through them. 10 minutes on the toilet bowl, and you'll be done with all of them. Anybody have any last questions or anything like that? And if you're interested, yeah, sign up. You go here. 3-day free trial, no credit card. All right, you get a feel of what the hell we're looking at. And then, yeah, private Twitter, you got to go here, products, private Twitter, and that's where you get it. This is buy sell pressure on ES, what I got up there now. This you're talking about? Yeah. All right, guys. All right, so we'll see. Like I said, tomorrow, big day. Go look out there. Be safe. And hopefully we see Bazooka Joe coming to a theater near you. Be good, everybody. Thanks for stopping by.